A warm greeting to the person watching this video. So this is Aishwarya, and well, we are fortunate enough to get into the International Conference on Cognitive Intelligence and Computing 2021. And the topic that we have taken for our paper is analysis on Tesla stock price forecasting using ARIMA model. So we are five in a team, like myself, Aishwarya Subakar, and my professor, Gracelyn Jasmine ma'am, and Jani and Bersi ma'am. Well, my colleague, my friend Ganesh, and CM Yuktashri. So moving on to the abstract part. So what is stock market basically? Predicting stock price in a short term is always a demanding task over the decades. Very common thoughts of a human being is to devote money to the stock market results in a kind of tremendous output. So strong research time was invested in stock market prediction as it is an important phenomenon of the economy. So this has also sparked the development of improved models for stock price analysis. So the auto-regressive integrated moving average is a type of moving average model that is used for building a stock price forecasting model. So in this paper, we have used ARIMA to predict the stock price on daily basis, on daily trading stock prices, that is published by BSE and NSE, that is Bombay Stock Exchange as well as the NSE. So ARIMA model is analyzed for time series prediction, and the results are obtained using this model show a strong accuracy for short-term goals. That is the daily stock prediction. This engages with another model for predicting the stock prices. So moving on with the introduction part, a stock market is a place where, so I'm just giving a glimpse about the stock market. A stock market is a place where investors buy and sell out securities of public companies which hold shares, bonds, or other monetary apparatus. So other kind of products. So machine learning plays a key role to analyze the trend of the stock market. So in stock market, forecasting, the basic objective has been important to buy the stock, sell the stock, or hold the stock decision. So today, many researchers are fascinated by the machine learning techniques that provide decent accuracy rates of prediction. ML used various parameters to the stock market scores and contributed numerous prototypes. So from the stock market emergence, from the start of the stock market, there are various researchers with variety of methods and movements to study the stock prediction. From an economic view, investors maximum use the sequential fundamental analysis, a kind of traditional way, and technical analysis to forecast the stock market. So how we can bring a new idea though is the main aim of this project. The paper. Well, yeah, so this paper has been organized as follows. Session 2 focuses on the related work and the methodology performances. Whereas to be precise with the prediction, with the respect, and also the time series forecasting model for precise prediction stock with respect to the observed values, and the future forecasting is also detailed. Session 3 explains the results and the discussion part, which deals with the forecasting. It also explains the comparison of fit performance metrics for various statistical models that we have taken, that we have brought to the table maybe. So session 5 details gives a brief intro about the conclusion and the future scope of this research paper. So moving on, so this is the key part of our paper. So ARIMA model provides a technique to forecast time series. The most widely used approaches and are the exponential smoothing and ARIMA models to time series forecasting. So ARIMA model aims to express an autocorrelation from the given data, from the data that we have. Before getting to know the ARIMA model approach, the concept of stationary and differencing time series has to be analyzed. So stationary time series, a main property or maybe a main characteristic is it does not depend on time. So moving on, so in figure A, so this is the figure A. And so in figure A, the Tesla stock value was non-stationary, but everyday change in stock values were stationary in figure 2. Like when you're going to have it for a long term, then there were no there were no stationary stationary points, whereas in it's going to check the values of a daily basis, we have stationary points. So this helps in understanding how to make a non-stationary time series to a stationary time series. So in order to calculate the difference among the continuous observation. So this is known as differencing, to be precise. The variance of the time series can be done with the help of transformation of logarithms to be stable. So differencing can stabilize the mean of the time series by eliminating the changes in the level of the time series. So Arima technique can be explained as a combo of two autoregressive, that is AR model, that is integrated with the moving average, MA, that is ARIMA modeling, denoting the notation of ARIMA is like PQ and it's like PDQ. P is the degree of process of AR, whereas D is the value of differencing, and Q is the degree of MA. So the ARIMA AR is ARIMA indicates approaches analyzed on the dependent relationship, so among the current data and the previous data. An autoregressive with the order of AR, that is P model of ARIMA, that is P, 0 and 0, is stated as follows. So this is the equation. So moving on to the second, like we are moving on to the ARIMA model, like ARMA and ARIMA. The letter I represents the integrated part. So the difference between ARMA and ARIMA is that single I, with significance that the data is statistic, and if the data is non-statistic, then the integrated part is to convert into static. So time series data has been made static by removing the observation from the previous data, that is referred as stationary data. The MA stands for the moving average, as I specified earlier. So this means that the forecasting outcome is linearly dependent on the previous data. Moving average model with the order of MA or ARIMA as stated below. So these are the things, and we have the like what does it, like what is X, T, and all sort of explanation is given below, and the performance metrics. So we have taken R square, MSE, RMSE, MAE, and MAPE. Yeah, so these are the performance metrics that we have taken. R-square technique is a statistical measure of regression, provides an understanding of how much variation of the dependent variable is defined by the independent variable. So R-squares are stated as the percentage from 0 to 100 in this approach. Value ranges from 0 to 1. And we're talking about, like, moving on to MSE part is expressed as we all know, the mean or the average of the square of the difference between the real values and the estimated values. Whereas moving on to the RMSE maintains an estimation value, and this technique provides an accurate phenomenon and reduces the large errors over. So the capacity to differentiate various time series is restricted with this approach. So MAE verifies the error magnitude for an accurate set of prediction. So it also describes how close the actual outcome value while comparing it with the forecast value. So the direction of forecast is not considered in a metric. So in this metric, moreover, the precision of continuous variable are determined in this metric, and MAPE provides a differentiation or a kind of a different time series data value without describing the error percentage. Yeah. So this metric is something that is unique, and this analyzed the parameters are huge. Yes. So the experiment and the discussion. So this session, in this, we have taken the Tesla stock value from July 10, 2015 to July 10, 2020. It's around 5 years data set. So are conducted to analyze. So we have taken those. We have taken the high value. The data has consists of high value, low value, close value, and adjacent close value from years to days computed to check the prediction performances. So about Tesla. So as we all know, Tesla company was launched in its initial public offering on June 29, 2010 by NASDAQ trading. Tesla provided 30 million shares at a price value of $17 per share. So this is something that is that we need to know. So it would be a part that was launched in Wall Street at New York. So all sort of explanation of Tesla. There is ARIMA model for Tesla stock prediction. So the auto correlation lag plot of Tesla adjusted the close value closely follows a line as shown in the figure 2A. I'll just show you the figure. Tesla adjusted the close value series was split into 80% of training data information, and 20% of test information data. So forecasting was performed to look at the data set. The taken data set of Tesla stock value, as I specified earlier, July 10th, 2015 to 2020, a forecast performed dependence on evaluation data values in previous time steps were considered. So ARIMA was recreated once ever a new evaluation value is received to get the trading forecast. All the observation, that is AR, manually tracked and holds on in a kind of exceeding list known as the history with trading data set information, and to that new observation AR to every iteration, every loop kind of way. So yeah, so this table gives you a clear analysis of the different accuracy metric values. So we have used R square, MSE, RMSE, MAE, and MAPE. So you can have a look at the values. So yeah, so these are the values. And then moving on to the conclusion part. So this paper dwells into the process of developing an ARIMA model to forecast the stock value prices. So finding, because if a person is going to if not going to lose money in stock markets, so something that is considerable, right? So the finding obtained with the best ARIMA model demonstrate the ARIMA models have a promising future in the predicting stock values. So ARIMA models will be able to compete fairly with raising statement strategies based on the results obtained. So the model's effectiveness is evaluating using, as we specified, we are using R square, RMSE, MSE, MAE, and MAPE. For the considered data set that we have taken, the time series models predicts the cases like the observation than other models that are compared. So the proposed model generated accurate forecasting, achieving an R square value as 99% of ARIMA. Hence, we have performed the future of forecasting on the new cases in the upcoming month using time series model ARIMA. For maybe in future work, so it is intended that deep neural approaches to perform data augmented to deal with the small data samples to tune hyperparameters using multi-objective optimization for forecasting models as compared. So it's all about that. And yeah, so you can have a look at the reference part as well. We have given around 7 references. Yeah, so it's all about that. And thank you so much for the opportunity.